Greetings, this is Jeff Scott, and this is, I believe, June 7th, 2015, and welcome to this week's review. I've entitled this that we're back to support, but divergences aplenty, and will they be a signal that we're going to roll over here, or will we continue in this narrow trading range and anticipate perhaps a bounce this week? Let's take a look. Let's see what our data is suggesting. Disclaimer, this is for education purposes only. Anything I recommend is in the spirit of education and should not be considered investment advice. I am a doctor, not a broker. I am independent and not affiliated with any software vendor or trading company. I have paid for all the tools I demonstrate, and trading involves risk, and you alone are solely responsible for any decisions you should make. It's important to me that you know where I come from. I trade predominantly equities. I like options often in lieu of stock, depends on sort of my time frame. And I trade growth stocks. I look for uptrending stocks that pull back to support and want to buy them on momentum. I have a basic understanding and base of knowledge from Cancelim, and that's been improved by both Morales and Katcher, the O'Neill disciples, and Woodward and Brown. I'm a fan of Alexander Elder, both his books, his teachings, and his Spike Trader group. And I've learned a lot over the last several years from my friend John Person. Here's a couple of his books. In fact, John really has helped me look for momentum changes, buy and sell signals that I can scan for in multiple platforms, and the ability to scan for buy signals that support, which is really the trade that I like to take. Dorsey, I'm not going to push point and figure on you, but rather say that how he looks at comparative relative strength I find valuable. My partner, George Lee, we do the education programs together. One's coming up, we'll mention. And then Van Tharp for position sizing, and Anna Cooling on the volume price analysis. I have a lot of programs, but I can get by with just a few. I need probably both TradeStation and Thinkorswim because those are my favorite platforms for actually doing the trades. If I have to pick one real-time platform and it can be independent of trading, it would be Genesis. I use all three during the day, and when I do my scanning and planning for the following day, I use EdgeRater and HGSI end of day. For seasonality, I own all the major programs, and I use a number of websites. The first line hasn't changed, and that topping is a process, and I think we're in that process now, but that doesn't say we can't go higher. I did change the second, where I mentioned that markets likely peak after they're preceded by divergences, and I added some of which may be lurking now. Major themes this past week: small stocks led, bonds dumped as interest rates rose, transports are going up while utilities are breaking below support, and these are pulling the Dow down, and the Dow is dropping, the S&P is at critical support, and the NASDAQ, at least the NASDAQ composite, not the NASDAQ 100, actually was up on Friday. I looked at hundreds of charts, and it's pretty clear that yield matters, and stocks that do poorly in rising rates, such as REITs, MLPs, utilities, and bonds, and dividend payers, except for perhaps marine shipping, these stocks and these dividend payers did not make my top 500 or 600 stocks. A couple of home builders did, especially some of the smaller ones, or less common ones like WCI. Now, rising rates do drive up banks and insurers, and regional banks especially were all over my top stocks. Trading range is narrowing. We're going from support to resistance and back again in the matter of a day or two. There's no big trends until we break out of this range. And, this has been an era of select leadership. Think Ambarella, AVGO, several other high-moving Broadcom, semis. Some of the semi market probably stimulated by mergers with IBM taking out Atmel and Broadcom being acquired by AVGO. It'd be interesting to see if there's continued acquisition activity. I heard some things about potentially Qorvo and Skyworks being acquisition candidates as well. And again, as I mentioned, the banks looked great. Here's a snapshot of the end of the day on Friday. And this is something that's prepared by John Person, and anybody can prepare it. He does it for you as part of his package. And he's broken out some of the major industry groups. One could see utilities were very weak on Friday. All except one were down. On the other hand, as one scans around, you can see some strength in retail. Transports are picking up. Biotech still predominantly positive. Social media moving up. Baidu is one that I'm in that had a very nice day. Technology was mixed. Regional banks, even more so than large banks, were positive. Remember that stocks are cyclical, and the types of stocks that we trade in this video, in this webinar series, are high growth stocks. And high growth stocks, as we've been taught by Ian, go up like rockets and come down like rocks. You have to know where you are in each stock's pattern and the market's pattern. And one of the things that I talked about is that we've sort of truncated the top, and we just have this very narrow range. And as soon as it looks like we're rolling over, we get another leg up until we don't. And so right now we're at that point where I might expect, based upon chart patterns, that it's time for that leg up. And that's continued multiple times, but one time it may not. And then based upon where I see us in the market, I could be aggressive if I'm beginning a uptrend, buying stocks and calls, selling puts, doing some cover calls and bull put spreads. I can be bearish if I'm convinced the market's rolling over with some bear call spreads, buying puts, selling calls, shorting stock, and going long contra ETFs. But when we're at where we're at, which is sort of in uncertainty, it's a lot of raising cash, taking smaller positions, and then on my existing positions, selling premium. You need to know your news and your EPS dates. Last week was a busy week with the monthly unemployment report, and this week looks a little bit lighter. I really think what's going to be driving the market now is going to be Fed speak about whether September is a raise or they're going to listen to the EU and the International Monetary Fund, sorry about that, and push back interest rate raises to the new year. Why would they want to do that? Once we start raising rates, the dollar will go up. That will increase the cost of our goods outside the U.S. It will have impact on multinational U.S. companies and hurt them in the stock market, but will also cause problems perhaps in the emerging markets and those countries that may be having some issues financially. From an earnings week, we're clearly near the end of this earnings cycle, but that doesn't mean that it's not some big ones coming out. I believe AKRX, which is not on the list, will finally be reporting on Monday. Burlington, one of my favorite chart patterns, although you can't touch it because it's pre-earnings on Tuesday, as well as Home Depot Supply or Home. I call it Home Depot. I'm not sure it's Home Depot Supply. It's one of my stocks we'll take a look at. Francesca's a teen retailer, X1. So a number of popular stocks, but not a lot of stocks reporting this week. So as always, I'll do my introductory comments. I'll take a look from a top down of what the market is doing, sectors and stocks, and then as time allows, do a little bit of scanning. My conference for the 27th through 29th is officially sold out. I had a couple of spots that I filled with the wait list. The wait list is empty now. If people have interest in attending but have not sent a check or have not told me they've sent a check, then please email me at hgsidoc@gmail.com before sending a check, and I'll let you know if we have availability. Message to those that are coming. First of all, thank you for the confidence you put in me and spending your hard-earned money and your travel time to come visit us. George and I certainly appreciate it. I will be sending out an email probably end of week or at latest beginning of next week with further details about the meeting and some of the housekeeping issues, as well as a spreadsheet of who's attending, so you might be able to hook up for cars from the airport. And as well, I'll be sending out a link with a Dropbox, which George and I will start to populate with the material that we're going to present. And again, thanks again for coming. And we'll see you in Florida. All right. Just take a quick look and see what the futures are doing, if they're doing anything yet. And the futures are minimally up at this point. There's been so much volatility in the futures that I would say they're not very meaningful right now. So basically, I've got open TradeStation and Thinkorswim. I hope I've turned off my personal stuff. I probably have, and even Trade Navigator. I've got HGSI, and let me open up a spreadsheet to start with, and we'll take a look at the market. I did not, since last week I was at ASCO, I played hooky on my usual routine, and I didn't build my giant list of lists. So I'm going to have a truncated Excel vision of the market. As I said, small caps are probably where the strength is right now. The dollar and even volatility moved up some this week, although it seems to struggle at its 200-day moving average. So this will come up in a second. Let's quickly take a look at my TradeStation indicators and get a sense of what John Person signals and Alexander Elder signals are telling us about the market. So I look at this all the time. And what I look at, for those that are new, I have two plugins for TradeStation that I'm looking at here, actually three. One is Alexander Elder's, and I'm looking specifically at just a couple things. Oops. On Elder stuff, I'm looking at the color of the paint bar. Red tells me it's okay to short, and I shouldn't be going long. I can hold is okay. Green says I shouldn't short. It's okay to be long. And blue means I can go whichever way I want. The second thing I'm looking at are these red dots that are adjacent or included within the candlestick, and those are evident of MACD divergence. The magenta and cyan, larger blue dots are person, buy in cyan, and sell in magenta. And I'm looking at the third indicator being my high jump on TradeStation, looking to see if I've got extension so far above the moving averages that I would expect a bounce or either up if I'm in a downtrend or pullback in an uptrend. I have weekly and I have monthly. I like colors and dots because I can quickly tell you what I see. On the NASDAQ, I have caution. I have a red bar on my daily Elder. I'm on a person sell signal. I'm on blue and blue on the weekly and monthly. So it's not fully doom and gloom because the longer term charts are still holding, but I would be very careful going aggressively long in the NASDAQ until these at least go blue, and I'd be looking for a reversal in John's signals. On the Dow Industrial, you can see how much further this is sold off than the NASDAQ. NASDAQ at the upper half of the channel. The Dow is getting down towards the auto envelope. Red bars, red on weekly, high jump nowhere close to being meaningful on a person sell signal. So clearly the Dow is weak right now. The S&P 500, not quite as bad as the Dow, but pretty darn close on a sell signal in red. The Russell 2000 futures, the only bright spot with green and on a person buy signal. If I look at the IWM, which is an ETF of the Russell on a buy signal in green. What's interesting, if you look at the NASDAQ composite, which is in the middle of the range on a sell signal in red, and compare that to the NASDAQ 100, the NASDAQ 100 I think is even weaker than the overall NASDAQ. So large stocks being sold off. So you got to feel kind of bearish based upon what we've seen. And then I like to look at my spreadsheet and get a sense of some other non-correlated indicators. So we'll start with the Hindenburg. Remember, we see a series of Hindenburgs before most, if not all, major corrections. We haven't had a major correction in years. We haven't had a series of Hindenburgs in years, so no Hindi. I look at bucketology, which is a look at all the stocks in the S&P 1500 and ranked by decile within the Bollinger Bands, with one up above and one below. And there's really no pattern here. At market tops, we have a pile in of the greater than 1. At market bottoms, we have a pile in of the less than 1 or less than 0. And you can see it's pretty much neutral. If I look at the midline of the S&P 500, and assuming that an uptrend of stock bounces between the upper Bollinger Band and the midline, and a downtrend between the lower Bollinger Band and the midline, you can see that we have a slight increase in stocks below the midline. So consistent with bearish, but not at a point that one would expect this market to be done. However, when I look at the Woody indicator on the markets, I could see that we're in best case we're in chop, and in worst case we had a shot across the bow of the bulls with kahunas across the markets on Thursday, enough to take the Woody indicator and take the greens away and make it yellow and red. So again, at best chop, at worst case moving into a worse market. From a seasonality perspective, let's just concentrate on the 1 month column. You could see I have a number of stocks that have 10 out of 12 or 11 out of 12 positive, including Acorn, which is due to report this week. And then if I look at percent return, I'd probably skip the first one. It's clearly an outlier. But I could see Cyberonics, CYBX, is up 13% on average, up 10 out of 12 years. Triple D, not been a great stock of late, up 10 out of 12 years, an average of 10%, and so on and so forth. I use these not to make trades just based upon seasonality. I believe that John Person's correct when he teaches that technicals trump seasonals, but I do use it to add to my watch list for me to look at charts that might have the wind behind their back. You'll notice that most of these analysis have been run on EdgeRater. All right, so my sense at this point is the market's at the lower part of the channel, and that a bounce here could reverse some of those signals to be buy signals, but right now the market is the lower end of the channel in a sell signal. Now let's open up HGSI. Let's go into the warehouse view. Let's go down to Woodward and Brown user groups. Let's go to Major Markets Plus, and let's look at a top-down view. Top-down view is purely technical. Price and volume heavily weighted towards Friday, some towards Monday through Friday, and just a little bit towards 3 weeks. As I mentioned before, the strength of the market based upon this ranking system is small caps, and the dollar is up here as well. Oil and gas are moving up. To the downside, and transports have come up off the bottom. To the downside, utilities, treasury bonds, silver, gold, and the big stocks of the Dow, the S&P 100, the S&P 500, and the NASDAQ 100. If we look at performance on Friday, gasoline and oil were the only ones up 1%, and below 1% were treasuries, utilities, and volatility. I like to look at some of my favorite indexes to get a sense of what's going on. We know from the spreadsheet that we saw a lot of kahunas on the major indices on Thursday to the downside, none on Friday. So I'm going to go to a simpler view of moving averages. And what do I see here? And excuse all my writing, but I was of the hope that we were in what turns out to probably been a bearish wedge on the S&P 500. And as you could see, that we broke out below that bearish wedge on Friday, and that could be a foreteller of doom and gloom. On the other hand, we did have a doji on Friday, maybe an official doji. I'm not sure it meets the 7 or 8%. And maybe that's the reverse of a spinning top, and maybe that could be the beginning of a high close doji and a reversal. What are my targets? Well, if I can't get back into this channel or above this channel quickly, I have to start thinking about what is my risk of actually visiting, and it sounds horrible to me, this 200-day moving average, which is would be somewhere around 2050 when that happens. So that's my downside. My hope is to see us get up above the trend line and either get back in the chop or begin an uptrend very quickly. Without that, I think we have a risk of a pullback to that 200-day moving average. If I want to look at the Dow Jones Industrials, it looks kind of like the S&P, sort of breaking through support. Worst case scenario, our next big support is probably down here at the moving average. It'd be nice to see a bounce before we get there. Now, why is the Dow bad? Well, the transports had been leading the Dow bad, but it looks like transports are starting to go up. So transports look like they perhaps are recovering. And I can tell you in this week's review, it wasn't airplanes that I was seeing. I saw a lot of truckers. What's pulling the Dow down if transports are going up is the utilities. And you could see the utilities have broken through support, and not a big surprise for utilities to be breaking down as interest rates are rising. If I want to look at volatility, I can see the volatility keeps failing at this 200-day moving average and pulls back. A breaking out above that 200-day moving average and holding would probably be foreboding for the market. In case you don't know the relationships between the VIX and the stock market, a shooting up VIX like this is associated with a rapid and hard sell-off in the market. A declining VIX is when you want to be making money long. I mentioned strong dollar earlier, and you could see the dollar on Monday bounce back pretty much up to the weekly where it started the week. Now, if the dollar was strong, then that tells you certain things that are going to be weak, such as gold breaking through support and silver. So on this view, the market, certainly the big stocks look like they're breaking down through support, and they are at risk of falling through. Now let's take a look at what's working. Take a look at the NASDAQ. The NASDAQ really remains pretty much, maybe not exactly in that trend line, but at the trend line. And in fact, if I look at, well, I'll come back here later. It shows up better in higher resolution. So the NASDAQ's at a critical area, try to get back into its range. And the Russell 2000 is probably the champ here. And the Russell 2000 is probably the only one that is closing. Whoops. I have to remember to take my hand off the mouse before I take it off the shift key. So the Russell 2000 is about the only one of the indexes that's trading above support. So markets are in entropy. The divergence here is the small caps doing well, large stocks doing poorly, and the sell-off in the utilities is probably not that surprising considering interest rates. Now, it's probably within HGSI. I just don't know where it's at. So often I'll go into TCNet and take a look at interest rates, especially now because I think these are going to be paramount in the decision by the Fed. And so what I want to get to is let's see if I can get this right. Here we go. So you could see that on a monthly chart, let's go to a weekly first. Go to a daily. You see on the daily that we've broken out above prior resistance here on the TNX, which is a 10-year Treasury yield. And one would not be surprised if the Treasury bonds are going up, to see the bond funds going down opposite. So you can be going short the TLT, you can be going long the TBT as a way perhaps of playing the rising interest rates. I think Friday we saw a ton of money leaving the bond market. One might hope that it has nowhere to go except the stock market, but we will see. If I go to a monthly, or I'll go back to a weekly, you could see that the last time we were up at this point, we were back here in mid-October of 2014. So I think this is going to be very, very telling, and it may be that what the Fed does is irrelevant as the private sector is already starting to raise rates. Believe me, I don't believe the Fed is irrelevant at any time. So now I've got a bearish tint on the market, but still hoping that support holds where we're at and we see a bounce this week. Let's look at some sector work or industry work, and you can see we got 175 industries. And if I look at two-day force up, it gives me an idea of what's working, and we'll take a look at many of these groups as we go through. And you could see that 49 stocks made it positive. On the 5-day up, which is a little longer, we're at 50, so about the same. And the 2-day down, we only had 3 groups that were lagging: steel production, mass merchants, and publishing and broadcasting. But to show you how Friday may not have been indicative of the whole week, if I look back 5 days, I see that 37 groups are lagging. So let's go to the 2-day up and see what's working now. Renewable energy and equipment, this is where you're going to find the solar. I believe JA Solar popped because the chairman offered to take them private with his own funds. And you could see a stock that's really been range bound left to right. The offer came in where it was as low as it's going to be, makes money, but no earnings per share growth. JKS is another solar company. I like this one much more. Why do I like this one more? Simple. That if I try and figure out where up here is resistance, we've taken out resistance. So almost this is a cup and a flat handle, pull back to the 50 and going to run. I think this one is probably the most compelling of the bunch, but you'll notice its run of rising earnings per share growth might be coming to an end. CSIQ has been a big mover of late, running from 18 up to 40 nearly. It's in a pullback to the 200. Looks like it wants to bounce here. It still makes money, but diminishing earnings per share growth. And Trina Solar, another one, trading sideways at the 50 with some earnings still coming into the chart. So that's renewable energy. Let's go back. Biotech. Biotech is a mixture of some very big, I gotta make sure I rank this the right way. So let me go back a second and see if there's anything else I need to look at. Oh, it's important that when I'm doing this that I'm ranking it by raw combo. So let me go back to 07. And when I rank by raw combo, excuse me for that mess up, renewable energy drops to 5. So we may look back there, but number 1 is actually biotech. And within biotech, Regeneron, which is just a great company, they got a new cholesterol drug, they've got some eye drugs, they do a ton of R&D, some marketing, they have a lot of partners. Their market cap is $55 billion. It's a big company, probably not an acquisition candidate anytime soon, although often rumored to be a candidate from Sanofi. But you can see somewhat of a lower left, upper right, and every time this gets near the 50-day moving average, it's been a buying opportunity. Just for those that are new to me, these are some of my technicals up here, bongos and force. Green is good, red is bad. The first bar is a weekly bongo. The second bar is a daily bongo. I like to buy stocks that are in uptrends, and the weekly bongo is a great symbol of that. In an uptrend with a green weekly, we may often get a red daily signifying a pullback. The third color bar is a distribution. Green is dark green's an A, dark red's an E, and the variations in color are B, C, and D. Then we have the 13 and 2-day force. Again, the longer being green during an uptrend, and the shorter one oscillating back and forth during retracements and pullbacks to the opposite color. Then I have the high jump bar, recognizing that when it gets up to the top of its channel or the highest it's been to the left, you often get a pullback. It's a risky time to be buying. I have a buyable gap up bar, which is the green bar here. Then I have squeeze in yellow and mobile breakouts in green. On the price chart, I have an 8-day magenta and then a 1750 and 200 simple. I have dates of earnings, and if dividends are out, dates of dividends as well. For those that are fans of Morales and Catcher, I have pocket pivots. The darker would be 10-day, the lighter 5-day. Up are blue, magenta, and red are to the downside. This is on balance volume with a 10-day exponential moving average. And then these are the kahunas, which is a momentum indicator. Blue is better than red. Blue is up, red is down. The darker the color, the greater the degree. This dark gray line here is a great thing in HGSI, which is actually the index group. And you'll notice how often that stocks seem to track their index. These little red dots and green dots are part of the Wilder's PSAR stop and reverse system. And I think that takes you through all the things that I'm using. So Regeneron, lower left, upper right, looks like it wants to run again. Great stock, but at $500, not for most people. Juno is a new biotech that focuses on the immune treatment of cancer. Immune therapy is hot right now, and you could see they're breaking out above their post-IPO high, and I'm sure a lot of folks subscribe to the theory of when they take out the post-IPO high, the post-reaction, the post-emotion high, that maybe that's a good time to get back in. It's certainly not on the basis of earnings. Kite Pharmaceuticals, perhaps a little bit easier chart to be buying. Another early stage company in the immune therapy of cancer, does not make money, no likelihood of making money for years. A big move up on Friday when the first person received their drug. You can see the weekly bongo is red, suggesting that we're in a downtrend. The daily bongo has gone green, which says we're in at least a retracement at this point. Mobile breakup from a squeeze in a kahuna. This made it to my buy list, although I already have a position in it that I took down here on the reversal off the 200-day moving average with the momentum from the kahuna. Mankind, this is a company that I don't really love. They have the inhaled insulin, but they should be doing better than they are. And they've got partnerships selling their drug. There's increasing marketing being done with their drug. They have other drugs, and I think much of their story is being discounted. I'm not buying it here, but what I'm telling you is that this might be an entry point on a nice biotech with an approved drug that I think will go higher. And then here's the biotech index. Others to point out to you. Intrexon, I think, is at an interesting buy point. They create a lot of the DNA and other related materials that various biotech companies use. And they've been in a pullback, which ran into the 50-day yard line, 50-day moving average. And you can see all green up above in a squeeze, pocket pivot and kahuna and taking off on Friday. One to keep an eye on that I know some of you probably have, which I am currently not in, is Clovis. and I point out that here's a stock, this may be a theme today. Ian calls it free parking, is to look at great stocks pulling back to their 50 as opportune buy points. It's only a good buy point if the 50-day holds. But ever since it broke above the 50 here in August, the 50 has been a very compelling place to buy this stock. And Clovis is moving up off the 50 at this point. Second group down, infrastructure software, which every time somebody gets hacked, these stocks move. FireEye is one I own. FireEye and VDSI. I had owned CyberArk, and I put it away at $65 a couple weeks ago, which might be time to go back in. FireEye had a Bible gap up on Friday. They're not up because of their pure fundamentals. They're more up because I think the story and the recognition that this group of stocks will be big growers over the next couple of years. So kind of a loose chart, but you can almost look at this as sort of a base down here. I guess let me do some drawing. You sort of had a base in this area, a wide base, but a base. And then you broke above that base, and now you've got a new base, which is sitting here. And if I did it again, let me try that again. Straight line, I want to. And what I sort of see here, if I ever remember to take my hand off the mouse, is that we've broken above, and perhaps we're going to start a new Darvas box, the next level up. So I think FireEye looks very attractive, not because of its fundamentals. More of the story. CyberArk is doing something I love to see, which is a stock to pull back, go sideways, and run into its 50 and take off with momentum. Everything is green. Mobile breakout out of a squeeze, a pocket pivot in Kahuna. This is why I'll probably go back in it this week. Palo Alto, the big kahuna in this group. Perfect tight lower left, upper right. Hard to get much of this stock based upon its price, but it's the leader of the group. Don't know much about Splunk. Pulled back, I think, maybe after earnings. Tried to make a recovery on Friday. Proofpoint, another in the same group. And as you notice, none of them have great earnings per share growth except for maybe Cyber. Most of them are losing money. Big uptrend, pullback. Looks like it wants to break out and go higher. So that is a group that continues to look attractive. Specialty pharma. These are a lot of different companies, several of which I have positions in, and some I kick myself because I do not. Here's Receptos. If I was looking to buy a stock, I like the pattern. Uptrend sideways, 50-day caught up. You see the industry group strength. Pocket pivot on Friday and a kahuna, although it had a kahuna to the downside on Thursday. Right on the 50. Problem is it's a $165 stock, has no revenue and no earnings. Heron. Interesting story. I'm not currently on any embargo of talking about them. So this is a startup biotech that has a innovative form of a cancer nausea drug. It's got a market cap of $776 million. It's had a big run-up in its price after a reverse split. The run-up in the price is because their data from the pivotal trial of their new drug was good, and there's a very high chance that this drug will get approved. At a market cap of $776 million, number one, it's much cheaper than most companies near approval. Most are at the $2 billion range. Number two, it's probably a takeout candidate by somebody who's looking for an inexpensive add-on to an oncology portfolio. I look at someone, for example, like Valiant. Why would Valiant buy Dendreon when they have no oncology focus? Perhaps they're looking at other companies. Regardless, I'll have to see what it does after the doji. I'd like to see it settle down. But the chart's extended. I don't think the market cap is. I think the drug gets approved in Heron. Probably not yet. Let it come back and buy it off support. Anthera, don't know much about it. It looks like it's breaking out nicely. It does not make money. And then a couple that I do know. Horizon Pharmaceuticals. This will be a case study at my meeting of how I use the synthetic position. I believe, either here or coming up through the moving average here to take a large stake in the stock and actually get paid money for taking that stake. And I'll talk about that as my meeting. Love the stock. It's not the same company as a year ago when they had problems. They bought a couple things, including a company with a late-stage orphan drug, and they're being priced now based upon the future, not the past. And I think it wants to go again this week. That's HZNP. Acorn's got earnings coming out. The thing I like about Acorn is its earnings per share growth rate. They've had some corporate integrity issues, and that's the downside. It'd be interesting to see if they come clean and put all their bad news into the earnings call. And if they sell off on the news, if their numbers are okay, I'd probably go long, because once you get the bad news out, they've replaced a lot of their leadership. It might be a time to think about it. Here's Pacira Pharmaceuticals. This was a stock that got up to $120. It's got a new, I believe, pain medication. Sorry about that. I just hit the wrong button. They pull back to support. They're at the 50-day moving average. Give me some momentum. If I saw a person buy signal, maybe a kahuna here, I'd be interested. It also had a PSA reversal on Friday. Great earnings per share growth as they launch a new product. And then one that I don't know anything about, Eagle Pharmaceuticals. I've unfortunately ignored this stock for quite some time because I hadn't heard of them, didn't know what they did. And then I looked at their earnings projections for next year, and I think MarketSmith is open on another computer, so I probably can't get in there, but let's just take a quick look, and you'll see why maybe you too want to find out a little bit about Eagle Pharmaceuticals. It's expensive. It doesn't make any money yet, although it's starting to have sales. And sometimes these big earnings per share numbers are difficult to hit. And if you don't hit it, your stock gets hammered. So you have to be careful around earnings time. But let's just take a quick look at EGRX and why it's now on my buy list for when I get a pullback. And you're going to get plenty of pullback opportunities in this market. No reason to chase things, although I did chase Ambarella when it was 60, and that paid off pretty well. And that will be another case study, how I did that at our meeting. So this is scary, the 45-degree angle. Projecting to make 75 cents in 2015, but more importantly, making $5.65, which is plus 653% in 2016. I think it's worth buying some shares of this and putting it away. It reminds me a lot of this guy, AMAG, which also had a huge earnings turnaround and still does going forward. And the stock has been in a nice run, and maybe it too will go higher. Banks were strong, especially regional banks. So in the essence of time, this is a typical pattern of stock that's been in a slight downtrend to sideways. It's been in an uptrend now since the middle of March and breaking out on Friday, pays a dividend, no earnings per share growth. I could have the same story. Zion's Court looks best, but it too, negative earnings per share growth, pays a small dividend. I am playing a couple things here. I'm playing KRE, which is an ETF on regional banks, which I've been in for a couple weeks, which broke out on Friday. I bought this with the knowledge that the dollar was going up, interest rates were going up, and I needed something that would actually go up on it. You could also look at XLF, the finance ETF, which actually had a bit of a shooting star on Friday. Of the big banks, I like Bank of America, but a very choppy pattern, but it looks to me like it's breaking out here, and perhaps it wants to go and retest its old high at above 1,800. Look at the earnings per share coming into this stock, and it's certainly got room to grow its dividend. So banks look interesting. Where I looked at renewable energy, let's make sure the order didn't change, our solar stocks. Application software, YY, also on my buy list, had a big move this week, but if I look at it here, again, not that great earnings per share growth on this thing, multiple of 24, doesn't pay a dividend. Had a kahuna, a pocket pivot, and a mobile breakout from a squeeze and broke above the 200-day moving average in a group with great group strength. And just for the sake of completeness, let's just take a look at YY for their projected earnings the next couple of years. And look at 2016, 481 up 39%. It trades at a multiple of 19, so put 20 on 481, you got a $96 stock. That tells me I can go 30% from here, 30 to 40%. So I'm interested in going long YY if it stays like this week. Synchronous Technologies, there's several here that had good charts. Sideways broke out on Wednesday. Good earnings per share growth, small dividend. Don't know much more about it. Manhattan Associates, another tight lower left, upper right. Looks like it's breaking out as well. Mobile breakup from a squeeze, kahuna, and a pocket pivot. And also up here, don't know anything about iDreamSki Technology. What I do see is great earnings per share growth on an inexpensive stock, an IPO. Now, I guess one rule of thumb would be to stay out of it until it takes out its post-IPO reaction high, but that gets you to 26. I probably don't want to do that, but I put this one on my radar and we'll be watching it. And if I look here at its earnings, you could see $1.50 or $1.30 at 47% increase. The stock, if it meets that, is worth much more than its $12. All right, continuing down the list, Internet Media. So Qihu, this is a stock that's been in a downtrend for some time, and it's run up right against its 200-day moving average. Everything turned green. Mobile breakup from a squeeze and a kahuna. Great earnings per share growth. I'll be watching this. I would not buy this until it took out its 200-day moving average. Stocks have a tendency to fail at that point. Sina is a game player. You can see it's moving up here. Youku, I think, another game player, Chinese internet company. Chinese internet. And then Facebook. Earnings per share are slowing down on Facebook. So the fundamentals as Facebook is now maturing. And you can see it does have as much as a 30% growth rate projected for 2016, 32%, but it trades at a multiple of 45. So although I like the chart, love the company, it's really been basing for the better part of 9 months. I would not let it get below the 200-day moving average. I'm a little concerned about growth prospects going forward. Although as soon as they talk up some of their new advertising and mobile opportunities, it always pops. Oil exploration, some of these stocks moved on Friday. You're going to see patterns of broken down stocks trying to recover. Here's Whiting, WLL, Pocket Pivot, and Kahuna, but in a serious downtrend on Friday. Here's EOG Resources, ditto, big up move, Pocket Pivot, Kahuna, downside. Occidental, Noble, Pioneer, Continental, Apache, Anadarko, all common, although Anadarko looks a little bit better, breaking up above the 200 and the 50. If I had to pick one thus far, this isn't Anadarko, this is Energen, EGN. And then Newfield. I just wanted to look at Fang because I have a position in that one. Fang is also pulling back. It needs to get above its 50 or I need to get out of that one. Don't love the charts. Probably moving based upon the fundamental story of oil. Oil and gas services, Halliburton. I'm out of my Schlumberger position, out of my neighbors. Has to get above its 50. Did have a kahuna, but you could see Halliburton's been a horrible downtrill. Seadrill, which used to pay a big dividend. I hear the dividend's been stopped and probably not 15.9%. Big downtrend. I'd like to see it get above the 200 before I took it seriously. Ditto for Rig. ditto for Ensico, and ditto for Baker Hughes. Lastly, communications equipment. Arista Networks, I thought they had a beautiful chart and some nice fundamentals. Sort of a saucer base, and they clearly broke out above the top, retested, and moved up on Friday. Great earnings per share growth, great group strength, trades at a multiple less than earnings. ANET is another stock that I put on my buy watch list. So that's my top-down approach. I might look at what groups are to the downside, and typically I build a short list as well. And that be for another time. So what have we done thus far? We've looked at, from a top-down perspective, the market, which I made very clear my concerns. We've looked at the leading industries, and we've identified a number of stocks that I think might be interesting if, remember the word if, the market stabilizes and moves up. Some of those stocks I think will represent some of the stocks that move this coming week. If, however, the market does not hold up, all bets are off, and I'll be looking to play the short side. I wanted to show you a couple of things. Let me make sure I got my personal stuff off, which I do. In Thinkorswim, one of the things that I like to do, and in TradeStation, and in Trade Navigator, is to look at some of John's signals. Now, I talked about the signals on the chart, but I also like to scan looking for stocks that are giving his signature signal, the high close or low close doji, or person buy and sell signals. So I can look for them and I can scan the market. So since I think the Russell is the strongest, I might want to go and scan just the Russell. So high close dojis, and I'll show you an example of one of those, is really his signature signal. A high close doji is a momentum reversal signal. It's a high close doji would be a stock in a downtrend that has a doji, and then you'll have to read his stuff and talk to him to know exactly the details. But when you fire the signal, it has been a high value signal for me to take. So let me go into this charting over here where I have daily, weekly, and monthly. And one of the stocks that has a high close doji is Burlington Industries. So let's take a look at Burlington Industries. My challenge with Burlington to buy it is because earnings are out this week. So let me show you what I see here. And these are my TradeStation charts. So this is my daily chart in an uptrend until April. It pulled back and it looks like it's stabilized and heading up. These little, whatever they are, ovals, are supposed to be arrows, but for whatever reason, TradeStation 9.5 doesn't see them that way. TradeStation 9.1 does. These are buy signals in green, sell signals in red. Come down here and I look at, what do I see here? So this is a stock that's been in a downtrend. You can see it's below the 200-day moving average. It had a doji on Thursday, and then Friday it closed above the high of that doji. Now, within John's world and his teachings, that is a buy signal. And he has a whole trading platform with a stop and with a projected target and how you should make the trade. But again, I'll let you learn that from him. So I will scan for stocks that have a high closed doji, and I will look at their on-balance volume, and then down here are my indicators that I use in HGSI, and you can have as many as, let's see if I can find one. You can have as many as, I think there's 7 dots. The top dot is a buyable gap up. The second dot is a pocket pivot. The third dot is a MOBO breakout. The fourth dot in yellow is a squeeze. The fifth dot is a PSAR reversal. The sixth dot, which you can't see, is a green candle low or a red candle high. And then the last dot is a forced kahuna. So I'm able to marry what I've learned in HGSI with what I've learned from John. So here's a stock in an uptrend, pulled back with a high closed doji, which is a buy signal. OBV is broken above its trend line, and it had a pocket pivot and a MOBO breakout, PSAR supportive. So in both of our worlds, Burlington would be a buy signal, except for the fact that it's got earnings this week. And I would look at, see, I've got a weekly in a buy signal. It's also on a person buy signal. And the monthly, I'm not sure I have the signal on it, but I suspect it's in a buy signal as well. So what I do is I scan the market looking for stocks that may be in the Russell, maybe in my top 1,000 stocks. I look for high and low closed dojis, and then I look for John's buy signals. And my favorite buy signal is a buy signal 2. And buy signal 2 represents stocks that are at support that give a daily buy signal. So let's go to a little bit bigger list here, and let's see if any of these will look good. Let's take a look at SanDisk, SNDK. So I know I looked at it, and it's on this list somewhere. These were the list of stocks that I was attracted to this week. Or did SanDisk not make it through? Here it is. So SanDisk has been in a downtrend, pretty clear. They had a big sell-off there. And here's the doji. So this is a high closed doji. It closed above the doji. Now, it said it's in a buy signal, but I don't see the person buy signal on the daily. Is this the daily chart? It must be buried under there. So I basically scan through the various scanners and TradeStation, Thinkorswim, and try and build a watch list of stocks that meet my criteria. Now, if you're a Thinkorswimmer and you want to scan the Russell looking for stocks that have person buy signals, all you got to do is go to the scanner, and I'm going to do this one from scratch. Go into category, public, Russell 2000. Set your price and volume. Let's add a study filter. Let's call it a person for person buy signals. It's a daily chart we're looking at. And let's hit scan. So in the Russell 2000, as you could see, we have a large number of stocks in Thinkorswim that have a person buy signal. We have 57. At the same time in the Russell, On a sell signal, I have only 24. So that's a bullish signal for the market, perhaps indicative that we're going to see a bounce. Let's go back to that buy signal and see if there's anything here that might look interesting. Let's look at that AKRX, which I mentioned earlier. So let's send it to red, go to my charts. And there's a lot of stuff on these charts, and they look better on a bigger monitor. But what I'm looking at here is I'm looking at AKRX on a daily signal, a weekly, and on a monthly. I have on-balance volume here in the light blue. Excuse me, in the yellow. The light blue, it's its exponential moving average. And you could see here on AKRX that I've got a person buy signal with this blue arrow on Friday. If I go back into HGSI, and I look up AKRX, which probably will not be in there. Let's see if it'll work. I have a stock that's pulled back. It's right at the 50-day moving average, mostly green here. And now I can add the fact that it also has a person buy signal. So what I have done over the weekend is I run a number of scans in HGSI. Some of these are smart groups. Some of these are HGSI scans. I have download the IBD groups, 50, 80, nightly weekend review, big cap 20, cancel them, select, and New America. The MarketSmith 250 growth, several MarketSmith lists, some of my views in HGSI. In TradeStation, I have run a number of scans, including person long and short for the weekend, and high close and low close dojis. I then create a number of super lists. For the sake of this discussion, I'm going to show you the stocks that I thought were interesting for this week. Before I say goodbye, I ran my scans, and what I came up with was I put it together, and I had 661 stocks that potentially were interesting. I did my review. I came up with 49 that I'm going to go through super quick. And within those, I really found this short list here of the ones that I'm going to plan on playing on Monday morning. So let's look at these in HGSI to start. And I'll comment on them very quickly as we go. Gilead's one of my favorite biotech stocks. It has broken out of a wedge. It works until it stops working. Earnings per share growth for this year are still good. They will slow down the out years. They're starting to build other franchises as their hepatitis C will ultimately erode. I still think it's a good hold. I'm not sure I'd be investing new money in it. HealthNet, I like HealthNet. I like CNC. The insurance companies, especially those that do manage Medicare and Medicaid, have been booming, especially with the talk of Humana being acquired. This is a much smaller payer. It's got nice fundamentals on its own, growing twice its multiple lower left, upper right. This is Comfort Systems. They make, I guess, air conditioners and other things for construction. Ever since December, lower left, upper right, nice uptrend, good group strength, everything is green, great earnings per share growth. That's what stood out to me. Continental Building Products. This is what I've been watching because of its earnings per share growth. I've been waiting for a buying opportunity. I love the sideways to the 50. All I need here is momentum. So I would be looking at this for any kind of a signal that I need to buy it. So one of those signals could be a person buy signal, CBPX, and I don't think we had CBPX. I don't think I've had it yet. Had one earlier in the week that I didn't take. So I'll be looking for a reason to get into Continental. I don't see it yet. So I call that a pullback waiting for a signal. but I do love the meeting up with its 50-day moving average. American Vanguard is a fertilizer company. Great earnings per share growth, broke above the 200, going sideways, had momentum come in. This is on my list to be watching. WCI Communities, I mentioned there were some housing stocks that looked interesting. Look at the earnings per share growth on WCI versus its PE. It looks like it wants to break out. A lot of truckers look good. You could have picked one of many. This is Martin Transport. I liked its combination of chart pattern with a kahuna 2 days ago, 3 days ago off the 50, all green up here, and makes good earnings. HD Supply, I mentioned it earlier, uptrend sideways to the 50, pocket pivot on Friday. This is one that I'm interested in, and I can't remember if this one had a PPS. I think I hit the wrong, try HDS. It had a buy signal earlier in the week. This is one that might be interesting. Home Depot, I call it Home Depot Supply. I assume that was a startup from Home Depot, a spinoff. Again, uptrend sideways, let the moving averages catch up and take off. Installed Building Products, another engineering contracting contractor. Great earnings per share growth. Pull back to the 50, breaking out. I'd like to see momentum come in. TAL Education. I talk a lot about my stocks in a squeeze right below the PSAR dot as great things for working people. Why is this a great thing? Because if I bring up the numbers here, I could go to work on a plane tomorrow and say, if TAL takes out the little red dot, so if it trades above that line, and I know that that line, that little red dot, is at 36.57. So if it trades above 36.60, I want to buy that stock. If I look at this chart, where do I want to put my stop? My stop doesn't need to go much below the lowest bar of the last 4 or 5 days. So my stop, worst case scenario, is 35.75. So I'm putting $1 at risk, which is a 3%. And I know that if the market opens up tomorrow, then this stock's going to go up, take out my buy stop, and I'm going to be long with immediately a protective stop at a very rational location, putting very little money at risk. And so I look for stocks that are at a base from an uptrend, and now they're basing, and I look pulling back to the 50, right below a PSAR reversal dot, as a time to get in, and you notice it had a kahuna on Friday as well. So that's probably my favorite charts of the week. I hate this educational services group, but several of them made my big list this week, so something might be going on with the group. Heritage Insurance, again, sideways to the 50, looking for a reason to buy it. Small dividend, should do well in a higher interest rate environment. AMC Entertainment, pull back to support with 2 kahunas. Earnings and dividends are out. I think this is a low-risk place to buy. The 200-day moving average has been a good support place in the past. Kind of ugly up here, but that's because it's been in a deep downtrend. When you buy stocks that pull back to deep support, you must acknowledge in your mind that you are buying stocks that are in a downtrend. That means your stops are close, your position size is smaller, and you raise stops as you move up so that you don't lose money. These have a fairly high rate of failure, but when they work really well. Since you're buying it off of support, you're not going to risk much as far as your stop. And on a pharmaceuticals, another hepatitis C company, great earnings per share coming into the stock, small multiple. This stock's been a mess ever since the Gilead and AbbVie wars. They make part of the AbbVie drug cocktail. Great earnings per share growth, some rumor of them being bought by AbbVie. Amira Natural Foods, this is in a downtrend, well below the 200-day moving average. I did like the pattern pulling back to the 50, taking off right below the PSAR dot with the kahuna on Friday. So again, I have a stock that is a low risk buy that I might take the trade, put my stop down here, a little bit higher risk because it's further away stop, put my stop at right below the 50. If it takes out that PSAR dot, higher risk trade, it's below the 200-day moving average. That may be resistance and could be a reason to be careful. DHT Holdings, one of these marine shipping drugs, big dividend, 7.4% shipping companies, not drugs. Great earnings per share growth, sort of basing over here. I look for some momentum, might be an interesting dividend play. SAIA, another trucker, pull back to support. It's in a downtrend, which increases risk below the 200-day moving average. Coming out of mobile breakout squeeze in a kahuna. Jabal Circuit. This one does have a person buy signal, I believe, JBL. Nope, did not have a person buy signal. I take that back. I like JBL or Jabal because of pullback to the 50. I'd like to see some momentum come in. Great earnings per share growth in a group that's been pretty good. Scorpio Tankers, ditto the one I said previously. It's pulled back to the 50, had a kahuna. Fundamentals look good. Mobile breakout out of a squeeze. Technicals look good and great earnings per share growth. iDreamSki we mentioned earlier. Synaptics, this is a technology hardware play. If you have a notebook computer, you probably have a Synaptics mouse pad. Nice uptrend. Probably not at an optimal buy point because it's pretty extended. I did like its earnings per share. Not sure why I put it up here. Let me do a quick check on the person stuff and see if that was why. Nope. Can't remember what I liked about this. Now, one of the problems is I did my scanning and chart looking on TradeStation, and sometimes the signals are a day off on that one. Cambrex, another biotech stock, a little bit of a base right off the 50, couple pocket pivots this week. OBV's pointing up, great earnings per share growth. I like this one. Noah Holdings, a Chinese asset manager. Finally, HGSI is starting to show some earnings. If you go on MarketSmith, a lot of this is going to depend upon the source of earnings and why MarketSmith had them before when HGSI was still giving you zeros. And you could see Noah Holdings has pretty good earnings per share growth, at least as good as their multiple. Nearing the end of the list, Annip Pharmaceuticals had been in an uptrend for quite some time. Let's look at a weekly chart. Well, it's gone from 9 to 72. Doesn't look like much here because it had fallen down to 9. It has pulled back some, as you could see on the daily chart, pretty much down to support here. The moving averages are hooking up. Had a kahuna earlier in the week. A bit too deep for me. I'd rather buy Acorn. I like the earnings per share growth better there, but I'm keeping my eye on ANIP. Bank of the Ozarks, this is just one of the regional banks that I'm in. I think it's got the best pattern of the works, and it gave me a nice buy point off the 50 here, and another buy point up here at the mobile breakout from a squeeze and a kahuna. Been in this one for a couple months. First Niagara is another bank. The reason why I chose this, again, strength in the bank, sideways consolidation off the 50. 3 kahunas in the last 4 days with a breakout. Everything is green. Eagle Pharmaceuticals, we talked about them. Great earnings coming in. Burlington Stores, I mentioned this as my first stock. Love the pattern, pull back to the 50. If it wasn't for earnings coming out, I'd probably either be buying it with a move up off the 50, or I'd be looking for a person pivot signal or potentially a kahuna. Here's that Acorn. It looks a lot like Annip, except it's been in a nice uptrend. Sold off hard here on the first corporate integrity question. Bigger on the second corporate integrity, but I think it wants to go higher again, driven by great earnings per share growth. Here's Horizon. I think I mentioned this earlier, another specialty pharma that I'm in. I like this one a lot. Ligand, another biotech play. These guys license drugs to others and collect royalties. Big earnings coming into the stock. They trade at a high multiple. They're probably worth it. Manhattan Associates, software company, lower left, upper right, kind of pull back to the 50. I can almost imagine a cup and a handle and a breakout with the kahuna turning green. AMAG, this is that biotech that had the earnings coming in with a big move. And then AbbVie, like Gilead in the hepatitis C wars. A lot to like about AbbVie. It pays a 3% dividend. It just bought Pharmacyclics. It has nice earnings per share growth. It's a biotech stock that pays a dividend like Big Pharma. It's a little loosey-goosey in the stock, I'll be the first to admit, but if you go to a weekly chart, this has been in just a great uptrend since splitting off of Abbott. In Trexon, I mentioned earlier, Kahuna's off the 50. Jinx Solar, we mentioned earlier. And then Skechers is a shoes or apparel and textile products I've been in multiple times. It's had a big run up. It's starting to base. I'd like to see it base longer, but great earnings per share growth in a good group, and I'm interested in that. Qorvo's another technology play. It's not fair to look at it in HGSI. HGSI treats it as a new company. It's really a merger of TriQuint Semiconductors and RFMD. So if you consider that RFMD is the acquiring company and make all the adjustments, you have a lower left, upper right from $19 all the way up to $80 stock. Big uptrend, big earnings coming into the stock, although earnings per share growth is slowing down. And then Stratasys. When I was in John's room a few weeks ago, I talked about DDD and how it met so many of my signals at the same time. So if you look at Stratasys, it's in a weekly buy signal, which is what I see here. And what happened on Friday was Friday generated a daily buy signal at support and, based upon my dots, a pocket pivot, a mobile breakout from a squeeze, a PSAR reversal, and a kahuna force. So I have a marriage of John's worlds with a high closed doji and a buy signal with all my signals firing at the same time on a stock that's clearly basing after a deep pullback, and I'm going to take a long position. Actually, I already did in Stratasys. I'm not sure it gets above the 50. You can see the 50 has been resistance a couple of times, but I can do a vertical call spread, which is what I took, selling one above the blue and buying one at the money and trying to make about 10 bucks, or $6 rather, on the call spread. And then SoFun Industries, another stock that's been in the penalty box in a downtrend since a big flyer in early 2014. Back to the daily chart. Why do I like it? Because it broke above the 200. Multiple kahunas. OBB turned up. Everything's green here. Mobile breakout from a squeeze. And sometimes when I see the zeros, and maybe more often in China stocks, it may just be that the vendor that HGSI gets its earnings data for is not getting the information. And we could see it's got 40 cents in 2016, over 100% growth rate. The stock trades at 8, and that kind of numbers tells me it could be a $20 stock again. Arista Networks we talked about. And then the transports I mentioned are stirring. And here's a stock that's been basing, and you could argue it's still in the trading range, FedEx. But if it breaks above this high here, which is only a few bucks more, I might be looking to nibble a long position on FedEx, especially with transports improving. We talked about SanDisk. SanDisk is in deep doo-doo, pullback kind of like Stratasys, had a kahuna, broke above the 50, group strength is high. Earnings per share growth is negative. They had an earnings miss here. But if I was interested in SanDisk, this might be a time to start fishing. Mankind I talked about. And then Under Armour, also a very nice chart, a pattern that I love, which you've heard about tonight. Uptrend, pull back to the 50, and a breakout above the 50, mobile breakout from a squeeze, turning green up above, and a kahuna and a pocket pivot. Under Armour looks good right here. Talked about CyberArk, talked about YY. And then JD is sort of Alibaba Light. Had a great cup, handle, and potential breakout here. The earnings per share growth don't look good. The chart does. Pocket pivots and kahunas on Friday. OBV going up. Also out of a mobile breakout and a squeeze. I'm already long on it. And then we looked at Bank of America. And then Qihu is, I think I talked about, another internet. Just worried about this 200-day moving average. A breakout above the 200, considering its earnings per share growth. Mobile breakout from a squeeze and a kahuna. I might start nibbling, but I'd like to see a breakout above the 200 first. So that was the list of buy stocks I got from my big group. I ran those through TradeStation, and let me just quickly show you what I found, and then I'll say goodbye. So these are the ones that made my what I call filtered buy list that I'll be looking at this week. So YY, we talked about this one before. High close doji, person buy signal daily, person weekly, OBV going up, mostly all green on my signals. Qihu, it had a person buy signal a couple days ago, had a weekly person buy and a monthly person's buy. My signal's turning green. Like I said, I need to see it get above the 200. And Trexon was doing a bit of a cup here. My signals look like a buy. OBV is heading up. Had a high close doji while already in a buy signal daily and weekly. Solar Fun, buy signal daily, high close doji weekly. This is a stock that's been destroyed, but even on the monthly, it's in a buy signal. And you can see the green and yellow down here. Under Armour broke out from a high base here. Well, a pullback in a base. Buy signal on person daily and weekly. And you could see almost the daily triple where they had 6 out of 7 of my dots have turned. Yellow is good because it means it's in a squeeze. The only thing it didn't have was a viable gap up. SAIA was one of the truckers. Person buy signal daily and weekly. Looks good under here as well. Anfi was that natural food in a deep pullback. Had a high close doji. We're already in a person buy. It had a low close weekly doji 2 weeks ago. I'm pretty much going to watch this one, and I guess I'd like to see it take out this gray bar before I get excited. XRS was that education class. Person buy signal and a high close doji. It's already in a weekly buy and a monthly buy. OBV heading up. FNFG, what was this one? I don't remember. This is Niagara Financial. Not a great chart, sort of sideways, but it did have a weekly high close doji and a buy signal on the daily. Stratasys we already looked at. So you've got a high close doji, a buy signal, all my signals firing. At the same time, you've got a weekly buy. I think Stratasys bounces at least up to that 200-day moving average. AMC Networks, movie theaters, high close doji and a buy signal. Jabal Circuit, it did have a high close doji, not a person buy. High close dojis are not available on Thinkorswim. And those were the ones from my list that I'm going to be concentrating. So let me just take a quick breath here and summarize what we did tonight. We went through the market where I'm cautious. We're at support. The small stocks are holding up better. Gold and silver are horrible. It'll be interesting to see if the small stocks lead the rest of the market higher or if the big stocks pull the small stocks down. I am pleased to see transports working, but most of the work I saw was in truckers. Did not see a lot in the trains that I liked. And from an airline's perspective, maybe Alaska Air and JetBlue, although I didn't look at them today. Banks continue to look great. I went through the industry groups that were working and looked at some of the top stocks in the top industry groups. And then I did the results of my bottoms up of looking at 600 plus charts. And then I tried to show you how I use thinkorswim and TradeStation to scan, and scan specifically for person signals, and then show you the charts of the stocks that I'm going to trade. I highly recommend you look up John at personsplanet.com. A lot of interesting and useful materials. He's a great teacher. He's got some mentorship right before my meeting. In fact, I think they have a couple spots left. If you're coming to my meeting in June and you want to take the week, Monday through Friday, beforehand and be totally burnt out for my meeting, you might consider his mentoring. If you have questions about any of his packages, give me a call. So I look forward to seeing people in Florida in a couple of weeks. For those that enjoy these reports, I appreciate you being here. I will be traveling again next weekend, so don't expect a report next weekend, which will be the 14th. On the weekend of the 21st, I'll do my best, but then I'll probably be gone for a couple of weeks getting ready for the meeting and doing the meeting. Take care, everybody. Have a great week.